The COVID-19 pandemic has placed immense pressure on South Africa's development finance system, with more sectors now eyeing these financial institutions, including the Industrial Development Corporation, the National Empowerment Fund and the Development Bank for funding. Now, development finance institutions are expected to invest more to ease the pain in these tough times, but is that the right move? Let's unpack the story now with the CEO of the IDC, TP Nchocho, who joins us now on the line. Mr. Nchocho, thanks very much for your time on the AM report. As I've just explained, we're all looking for some relief, particularly from our development finance institutions. But is this the right way to go, or should we be looking to the future?
Hello, good morning, Michelle, and thank you for your invitation. I think the starting point should be to say that indeed, as countries begin to push for economic recovery going forward, and also through the current transition, it will require all development finance institutions, but also mainstream commercial banking sector, as well as collective investment organizations such as insurance companies, to aggregate capital in order to make it available for the business sector. So there is a transition period to go through now, and liquidity, cash availability is what businesses need in order to meet their ongoing expenses, but they will also need capital for growth post this period. Yes.
But surely there is something that development finance institutions like the IDC can do now to help mitigate some of the struggles of COVID-19 to make that recovery period possibly smoother.
That's correct. That is why, and I can only speak on behalf of the Industrial Development Corporation, what we did is that we set aside initially an amount of 800 million rand, which was specifically to provide emergency funding in order to make essential supplies for COVID combating, to make those available. We have since deployed in excess of 500 million, half a billion of that. In addition to that, there is a 3 billion rand facility that we have set aside specifically to provide relief in the form of long-dated loans, but with measures of concessionary interest rates for businesses that are still surviving through this particular crisis. But we shouldn't underestimate the impacts. They are significant and they are severe depending on the sectors. You'll know, Michelle, that from public reports, for instance, the mining sector, as reported recently by Stats SA, saw a massive downturn during the first quarter of this year. Other sectors, such as agriculture, for instance, have shown a measure of resilience. I'm aware that a lot of our agricultural clients do continue to sell products not only in the domestic market, but also across other markets on the continent as well as abroad. So there are sectors that are more resilient, but there are others that are seriously, severely impacted. If you think about the tourism sector, the lodges, the hotels, places of leisure, and the IDC is a significant investor across sectors. I mean, the IDC has in excess of 6 billion rand invested in the tourism sector. So yes, we should work with those clients, one, to help them transition through this crisis period, but two, to position their balance sheets hopefully for growth post the COVID period.
Yeah, we've all been sort of comforting ourselves by saying, don't waste a good crisis. Good can come of the COVID-19 crisis in South Africa, particularly as it relates to our economy, our jobs numbers. What kinds of opportunities, let's say, have the IDC found in the COVID-19 crisis, as we continue to look to the future and try to look for some positivity in the months and years ahead?
That's a very important question, because we do have to look ahead. This too shall pass. So if one has a look, and because the IDC operates across the entire sub-Saharan continent, we are looking at how African economies could re-emerge from this crisis, hopefully much stronger. In the first instance, we believe that trade within the continent, and there was that initiative for the free trade zone across the African continent. That has to be implemented as soon as it is feasible to increase the volumes of trade between African countries. The second area of intervention is that the infrastructure deficit in South Africa and across the continent still remains an area of opportunity. So nations and businesses and development finance institutions and the mainstream banking sector have to make capital available for infrastructure development, for expanding energy access, for growing the telecom sector. Africa still has the lowest access density ratios for people accessing fiber technologies and so on. And the area of growth that we see for the African continent is that the continent has to play to its strengths. And indeed, Michelle, agriculture, availability of vast tracts of arable land is still one of those strengths on the African continent, as well as vast mineral resources that are still available across the continent. And lastly, I would say, in order to drive substantial inclusivity in the economic growth process so that there are as many participants as possible in the economic benefit, the small business sector should not be neglected. I think as nations recover, it will take a lot of capital to access and to provide to the small business sector. Much of the recovery, I believe, will be driven by SMEs across the continent.
Yeah, absolutely. Small businesses, the solution to very many of our economic challenges. Thanks very much for your time here on the AM Report. That's the CEO of the IDC, TP Nchocho, joining us on the line.